Let's start with the popular bull and bear segment. Nvidia, Adam, let's start with you. Bull or bear?
I am a short-term bear, long-term bull on Nvidia. I think that to me, as someone with a value bent, it feels like the AI boom was a little bit overhyped. The stock has run a lot. It's trading at a big multiple. So they'll have to execute, and things will have to go very, very well to justify that over time. But over a longer time frame, say 5 to 10 years, I do think AI is a very important driver of growth, and Nvidia is one of the best positioned companies to take advantage of that.
Austin, Disney's been in the news a lot the last 6 months.
From a short-term perspective, they're obviously struggling quite a bit. So I'm a bit bearish in the short term, but I think over time, they're going to get some things turned around. There's a lot of value in the Disney franchise. However, they need to operationally fix some issues at Disney. So I think it's cheap. It's probably cheap for a reason in the short term, but longer term, as they fix operations and get margins back in shape, get some of their media properties producing appropriately, I think that it's going to be a good long-term hold for investors.
Adam, Apple has been in the news here recently. What's your take today, bull or bear?
I'm a bear on Apple. Yeah. And I just think that over the Apple's had a tremendous run in the stock this year. It's been a safe haven for people to hide as they figured out what they really wanted to do. But at 30 times earnings, it's quite expensive for a company that doesn't have a lot of embedded growth with products that are so mature and generate so much free cash flow. But there's an argument around how much that's going to grow over time. So Apple, if I owned it, I wouldn't necessarily sell it, but I wouldn't be a buyer at these valuations.
Austin, JP Morgan, bull or bear?
Similar perspective to Adam. We've owned it. We reduced it recently. So I guess that's somewhat bearish, but long-term bullish for JP Morgan. It's one of the best banking franchises in the world. Definitely the best banking franchise in the US. However, the issues they're having in the short term is management's coming across saying that they're over-earning right now. Essentially, they're generating too high of revenues on their asset portfolio, and they're not paying enough on their liability portfolio. As those liabilities kind of increase in price, and the assets might see some degradation due to some write-offs and whatnot. If we have issues with the economy, you could see earnings come down, and the current valuation that looks really attractive might not be so attractive as we move through this current economic cycle.
Adam, bull or bear on Verizon?
I am a raging bull on Verizon. Look, I think Verizon and AT&T as well, we can lump that in, have been left for dead by the market, when in reality, these are great companies that generate a lot of free cash flow that are coming to the end of a huge CapEx cycle that will result in even more free cash flow. And Verizon at 7 times earnings with an 8% dividend yield, it almost seems too good to be true, but I just think that sentiment is that poor. But I would be backing up the truck on Verizon.
Austin, UPS is in the news this month. Bull or bear?
I'm a bear on UPS. I mean, $170,000 for truck drivers just seems a little excessive. It shows that the workers are kind of getting the upper hand on management. At the same time, we're seeing volumes come down for the business. So they're seeing kind of a double whammy of higher costs, lower revenues that are really eating into margins. We don't think the current valuation accommodates for that. We wait for the valuation to come in further before entering a position.
Adam, bull or bear on Paramount Global?
Paramount Global. Look, Buffett owns it, and he can't be wrong. Look, I think I'm going to have to say that I'm a bear on Paramount Global. I think that no one really knows what to do or how to value these streaming companies right now. For years, it was based on the number of subscribers, and then that sort of blew up in everyone's faces, and they've been cutting costs. Paramount is over levered. They had to cut the dividend this year, which saw the stock get killed. And it's not clear to me what the strategy is going forward, or how you turn the streaming business into a profitable cash flow generative business. That said, the out is consolidation, and maybe that's the reason Berkshire owns it.
Austin, Johnson & Johnson, bull or bear?
I'm a bull on Johnson & Johnson. There's a couple things going in their favor right now. One, they're spinning off the Kenvue business. Well, actually, it was spun off earlier this year. Now they're selling down their stake, which should be a good thing for J&J. They're also making progress on talc liability exposure. I know that hasn't been the most positive thing in the headlines or in the news, but that's created an opportunity for long-term investors to get into a high-quality pharma name that has potential to grow into the future as some of these issues are kind of put behind them.
Adam, let's wrap up with Qualcomm. Bull or bear?
I'm a bull on Qualcomm, but I will admit that, I was a bull before this recent quarter, which was a difficult quarter for them. Qualcomm, has a big business in let's call it non-Apple handset chips, and there's that segment is struggling, but it feels like it'll turn soon. Microprocessors are such an important growth story over the next 5 to 10 years, and Qualcomm is an integral piece of that puzzle. So for 12 times earnings, it seems like a great time to get into Qualcomm.
12 times depressed earnings because they're at the wrong part of a cycle in a cyclical business. It seems like a great time to be in Qualcomm.
Excellent. I love the bull and bear around.